Good day, and thanks for joining us for our Corn and Soybean Outlook webinar. I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture, and joining me today are my colleagues, Dr. Chris Hurt. Chris is a professor of agricultural economics and a longtime market analyst. And also joining us is my colleague, Dr. Michael Langemeier, who's the Associate Director of the Center for Commercial Agriculture, as well as a professor of agricultural economics here at Purdue. Well, our goal today is to talk about the corn and soybean outlook in light of the updated information we received from USDA's Acreage report released Friday afternoon. And when we planned this, we didn't anticipate it being quite as interesting or quite as controversial as it's turned out to be. But nevertheless, let's kind of review the situation coming into the report. So based on USDA's crop progress reports, which all of us have been following very carefully throughout the spring season, as of the 9th of June, approximately 15.8 million acres of intended U.S. corn acreage was not planted, and approximately 33.8 million acres of intended U.S. soybean acreage was not planted. After the June 9th report, the crop progress reports have become a little more challenging to interpret because after that date, approximately, the USDA reports started capturing, in some cases, on the part of some reporters, prevented planting acres as planted. And the goal there was to really have a report that actually identifies when farmers quit planting corn and or soybeans. But that left us with a challenge in terms of understanding and interpreting how many unplanted acres really were actually planted to corn or will ultimately be planted to soybeans, because in some areas we're still planting soybeans as we speak today. So the other thing I think is important to understand is how the USDA report is put together. The USDA report starts surveying farmers on the 30th of May and continues to survey them through the 14th of June. And so as a result, that report in some cases actually reflects people's intentions to plant as opposed to actual planted acreage. And I think that's created some confusion. And this year in particular, it's been a challenge. Most years, that's not such a big deal, but this year, I think a number of acres that perhaps people intended to plant simply were unable to plant. And our challenge going forward is to figure out exactly how many of those acres there really are. So this morning, we released the Ag Economy Barometer survey. The Ag Economy Barometer is a national survey of agricultural producers across a multitude of enterprises. But a large component of the survey respondents to that survey produced corn and soybeans. And so one of the questions we asked them was, how did the 2019 market facilitation program affect your corn planting decisions? And 21% of the farmers in the survey that produced corn or soybeans said that they intended to plant more corn because of the MFP program. We followed up and asked the same question again of people that grow corn and soybeans, how the MFP program was affecting their decision to plant soybeans this year, and 11% of them said that they intended to plant more soybeans. So the MFP program, Michael, was having some impact, at least on people's thought process with respect to their planting decisions.
Yeah, this was not real surprising, and I wasn't that surprised that the corn was a higher percent than the soybeans, because the economics favored corn in late May and early June because of this relative strength of corn prices relative to soybean prices. And so it's not surprising to me that the MFP affected corn more than soybeans.
And the driver, I think, was that USDA designated that you had to plant in order to get MFP payments. Now, there's been some clarification on that since, but at that time, that was the driving reason. Is that your interpretation?
Yeah, that is. And then I think related to that, when you look at USDA's numbers, which we're going to talk about a little bit later, but on the corn side, the USDA acreage estimate was larger than virtually everybody was expecting. And these results might help explain that a little bit. People had that intention to plant more corn if they could, and that probably is one reason why the USDA numbers perhaps were as high as they were on Friday afternoon.
And Michael, you've pointed out corn prices were really moving up in May as well, relative to soybeans.
Yeah, if you look at it in percentage terms, from mid-May to mid-June, I think corn prices increased, corn futures prices increased about 28%. Cash prices actually increased more than that. So another question we asked in that survey that's relevant is, do you anticipate taking a federal crop insurance prevented planting payment in 2019 on any of the corn acreage you intended to plant this year? And 32% of the corn and soybean farmers said that they intended to take a prevented planting payment on at least some of their corn acreage. That's a pretty big number. I was a little bit surprised at that. I didn't know what to expect when we posed that question, but that's a big number.
I was very surprised. I didn't think it'd be quite that high. Again, it's very important to point out that it could be part of their acres. It's certainly not all of their acres, and so it could be one field out of several fields that they have. But nevertheless, that's a huge percentage.
That gives you, on a national survey, that gives you an indication as to how widespread the crop planting problems were. We followed up with that group, so keep this in mind. This is the next question was only posed to the people that said they intended to take a prevented planting payment. So that 32%, we followed up with them and asked this question: what percentage of your corn acreage do you expect to take a federal crop insurance prevented planting payment on in 2019? And because it's a telephone survey, we don't ask for a number. We actually give them buckets to choose from. And if you take the upper two buckets, the 10 to 15% and the greater than 15%, that's 66% of that 32% saying that they intended to take prevented planting on at least 10% of their corn acreage this year. If you kind of back through the math, that suggests that approximately 20% of the corn producers, maybe a touch over 20%, in our survey plan to take a prevented planting on 10% or more of their intended corn acreage.
Now, obviously, this is very surprising because when we created these buckets, we thought greater than 15%. That's a large percentage. There won't be that many in that category. Obviously, that was where 51% landed, and so this was a really big surprise.
And I know here in Indiana, we've talked to a number of producers that had prevented plantings in the range of 30 and 40%. Yes. So. And in some cases even higher than that, Chris. So it's been indicative of the fact that perhaps the USDA report on Friday didn't capture all of the prevented planting acres, and that's one reason why our acreage estimates are probably going to differ somewhat from theirs. So this table was included in the executive summary presented to the Secretary on Friday. And it is the percent of acres remaining to be planted according to the USDA in their report on released Friday afternoon. And so we asked for some clarification from USDA. What this really amounted to was in the survey process, when they surveyed a farmer and they asked about their intentions, there was a field, a reference field, that was not planted, yet the farmer indicated that they intended to plant that particular field or that particular acreage. And their estimate was that 16.7 million acres on corn remaining to be planted here in 2019. Let's just stop and think about that for a second. Look at the history on that slide. Look at 2018, 17, 16, 15. That's a number that's about 10 times what it was last year, just for reference. So that's a big number. On the soybean side, 41 million acres remaining to be planted as of the effective reference date on the report. And again, that's roughly 5 times or so what it was last year, 4 times what it was in 2017. So again, large acreages remaining to be planted according to USDA's report on Friday afternoon, which seems to have maybe not been widely understood or widely disseminated by a lot of people looking at the numbers, Chris.
Just throw out a little additional thought on the soybeans, and that is that generally you get into mid and late June, and you're going to have primarily double crop soybeans. And we have 4 to 5 million acres of double crop soybeans. So take 2018 as an example, with 8.5, probably that's saying 4 or 5 of that is double crop, and that leaves 3 or 4 million acres. You take 4 off of 41, that's 36. You've got a 10-time multiple there as well, on these uncertain acres.
So I guess the reason we pointed all this out is really a couple of reasons. One is, although normally the acreage report that comes out at the end of June is pretty firm in terms of providing an estimate of planted acreage and that we can use to project ultimately production, this year there is a tremendous amount of uncertainty, and USDA conceded that and indicated, as we'll show a little bit later, that they're going to do some resurveying in the month of July and release those estimates in August. So we'll have some better estimates later in the summer. but in the short run, it leaves us with a tremendous amount of uncertainty regarding acreage.
And I think we can go back to the market signals we were talking about earlier. In late May and particularly in early June there, the signal was plant corn. And I think that's reflected in these numbers here. Rather than give up on corn, they still intended to plant corn. And just a reminder, this survey took place from May 30th to June 14th. And so particularly early in June there, their intention was to plant corn, but some of them just didn't get it done, of course, because it continued to rain.
Right. Just really didn't have an opportunity. So, Chris, let's kind of put some of these numbers in perspective.
Well, again, what we're going to look at are the numbers that came from the report. We'll discuss the validity of those numbers here in a second, but as we look at the acreage on corn for 2019, the acreage report, USDA said they found producers indicating they would plant 91.7 million acres. That's a 2.6 million acre increase from last year's planted number. And over on the right-hand side, we have the trade expectations. So the trade expectations were at 87 million acres. But what we have to say was there was an extremely wide range in what those expectations were from the various members of the trade that responded. So I think what we had was even the trade was uncertain of what was going to come out of this report, uncertain of what farmers were actually reporting, and certainly uncertain of what in the later June, all of June really, was going to happen in terms of the acreage number. So if you go back to trade expectations, we were nearly 5 million acres higher than the market was looking for. Now when you see that, when you see so much increase in acreage over expectations, if the market immediately believes the USDA number, you have to be bearish on that. And of course, that's the big reaction we saw. Soybeans went the other way. Trade over on the right-hand side was expecting about 85 million, rounded off. USDA said we only found 80 million acres in terms of what farmers said they had planted on beans and still intended to plant at the time they were surveyed. So here on the beans, we have a very low number, surprisingly low, and then look at the change, the 19 crop year versus 18, 9 million less acres of soybeans. So again, this is consistent, as Michael's talked about, with the direction of price, the direction of incentives in terms of returns, but much more dramatic to the downside. And what we see then is, in the second question after you see the numbers and say, oh my gosh, corn acreage is high and beans are really low, is are those numbers valid? So I think that's what the market has to sort through now, is what are these numbers? We won't have an update for another month. So the market's going to have to deal with these numbers and make their best guess as we go forward. Let's go down to the very bottom. And one of the clues, I think, that is consistent with what we expect on some acreage that just is not going to get planted this year. We take these 9 major crops and 245.7 million acres at the bottom of the 19 column, about 10 million acres less than we planted last year. So you start to look at the big crops, the big acreage crops, we're already seeing 10 million acres that USDA is saying are down from at least last year. Now we want to dig into that a little more, but this seems consistent that planted acreage is going to be down. Our questions, I think, really are on the mix of those. So much more corn than expected and so many fewer beans than expected.
And I think, Chris, we were talking earlier, I think one of the things that was interesting on this report relative to the pre-release intentions was the fact that on the corn side, the USDA number on Friday was above the
highest of any of the analysts.
Of the published estimates anyway.
Right.
And on the soybean side, it was below the lowest published estimate, at least of the ones that are widely circulated.
Big surprises both ways, one high, one low, absolutely. And again, that's not to say that the analysts were right, but I think what it ultimately tells us is there's just a lot of uncertainty. This is an unprecedented year, and when you go back and do the same statistical analysis year to year, it's important for USDA, but we don't exactly know how producers responded. and especially how prevented plant is going to affect these numbers, and other things that have evolved since the middle of June when they quit surveying farmers.
Yeah, some big changes that weren't captured on the report, largely because of the way the weather was relative to when the survey was conducted. Let's take a look at some state level changes, and these numbers are kind of interesting. And Chris, you've got a box there on the left, which I think kind of gives the summary for the total U.S.
Yeah, and again, these are from USDA NASS report, and what we're looking at, the top number in each of the states are the principal crops. These are the major crops that USDA tracks, total acreage, and the change from last year. Now, as we look at the bottom, the little box to the left on the bottom, total principal acreage was down over 10 million acres. So this seems consistent with what we are experiencing this year, just that inability to get a lot of these acres planted. USDA, as they look across these major crops, is picking that up. Now we look state by state and we begin to really question. I had a reporter call this morning and said, are these numbers accurate on Indiana's planted acreage? We look at Indiana, 11.7 million acres. That's a reduction of 430,000 acres. It turns out that as of Sunday, we still had nearly 1 million acres in Indiana that was not planted yet, according to the USDA Crop Progress Report. So again, this seems really inconsistent. They had some decrease, but probably not nearly as much as it's going to ultimately be in Indiana. Look at Iowa as an example, not much change. Now, we think Iowa probably also has prevent plant. We think they have some acreage that is not going to get planted, and that seems really inconsistent. Not that they should be a percentage as high as Indiana, but that number seems to be almost no impact of planting. Look at South Dakota, huge numbers, 2 million acres, and I think there a lot of marginal land. That's certainly possible. That number could even be bigger than that in South Dakota. And I think what it brings up is less planted acreage, but seems like a lot of inconsistency across states. And some of those numbers, like for Indiana and the Eastern Corn Belt, seem very small compared to the kind of numbers we've been thinking would not get planted.
Yeah, and I think, speaking for all of us, the fact that we travel quite a bit and see quite a bit of Indiana, for example, we've observed that there is a lot of acres across the state that haven't been planted. But it has been interesting. Some farmers in Indiana did continue to plant corn a little longer than I think perhaps we were thinking based on some of the budgets we'd done. And last week, still a lot of soybeans going in here in Indiana and throughout the Eastern Corn Belt.
And I think this is a classic case where I think they fully intended to plant the acres, Chris, and so that's where the 430,000 reduction is coming from. Is they wanted to get those acres planted.
I want to plant,
but they physically couldn't.
Right.
And so that's why we're coming up with 1 million compared to the 430,000 that we're looking here.
And
some of those acres we just couldn't get in.
And the insurance incentive they had, particularly on corn, was pretty good this year to just take
we're going to look
plant.
at that.
Yeah, we'll look at that later. So, and that is a big difference this year versus other years. The prevented planting federal crop insurance program payments were actually pretty attractive, and that actually encouraged, I think, some people to put land in.
Yeah, and I think
planting.
what this says is we see states where it just doesn't seem logical, the kind of numbers that they got, and that we need to see more accurate numbers. And NASS obviously agrees with that as well.
So, Chris, this is an interesting slide where you've taken a look at acreage planted versus acreage planted plus prevented plantings going back in time. Explain that to us a little bit.
Yeah, let's look at the blue line first. And essentially, this is trying to take a real broad base, looking at the crop base, most of the crop base. Remember, we have a lot of very small acreage crops, but 17 of our largest crop acreage crops in the United States. And we're trying to come up with what is that land mass that we have out there that could be in crops? So we've got the 17 crops. The CRP acreage, remember, is important to add back in, and then the hay crops as well. So the blue line reflects those 17 crops, CRP and hay, our land mass. But what we see each year, again, this goes back to 2007, since we've had prevent plant data. And the difference between the blue line and the red line is the prevented planted acreage. So you take 2011 as an example, 345 million acres planted to these crops, but there was about another 10 or so million acres of prevent plant. Now coming over to the right-hand side, take the same analysis, and we end up with a huge drop down to 331 million acres. And again, on a national basis across all of our land and most all of our crops, this is what we would expect to see, a big reduction in acreage, and that is reflected and was reflected in the acreage report. This is the one piece of information that seems reasonably consistent with what we think is going on this year. Now on the red line, we don't know the prevent plant for 2019, but I have just tried to draw that as a little bit of a downtrend again this year, that our total base with prevent plant acreage would be about 343 million acres. That would suggest that prevent plant on this, with taking the national numbers, could be something in the 12 million range. My guess is that's going to be 15 or more. Now remember, that's not just corn and soybeans and wheat, that's all crops. And so I find this reasonably consistent. About the only thing I could find in the acreage report that seemed to be rational and makes sense to me. So I think the prevent plant is what we're really, one of the areas that we're going to see some clarification on, and that is, how did producers respond in the survey? What did USDA really pick up? And we've got these points up in the box on the upper right-hand side of the visual. How many prevent plant acres are there actually going to be? How much got in the data? How much isn't in the data? And of course, what's happened since? There's been a lot of decisions had to be made since June 14th when they finished the survey. Lots of prevent plant acres. I think it'll go over 15 million.
So USDA indicated on Friday afternoon that they recognized the challenge they were facing, and so they indicated that they're going to re-interview in the states that are shaded in blue on the map on your screen. And Chris, I think the thing that I noticed as soon as I saw this map was this is unprecedented. We've had some resurvey situations in the past, but we've never seen one where we're going to resurvey on corn and soybeans in anywhere close to this number of states. In fact, if you look at that map, basically we're going to survey every corn state that's a major producer.
Every one, corn and soybeans that count. Mm-hmm. Every one that counts. And I think again, this is sort of tells us USDA's conclusion on their June report, the acreage report that was out Friday, and that is we need to do it over again. It's just not going to give farmers and agribusinesses and analysts the right information. We don't know it's right or wrong, but we need to redo it.
And I noticed in particular they were going to re-estimate sorghum acres in Kansas, and I think the reason they're doing that is not only get a handle on the sorghum acres, but you have to do that to make sure your corn and soybean numbers look reasonable. Because certainly when you start talking June, that people might have been switching over to sorghum in parts of Kansas. And so I found that interesting too, is they were going to survey corn, soybeans, and sorghum in Kansas.
So I mean, I think what it really boils down to is that normally June 1 survey data, nominal survey data June 1, works very well because the majority of the acres are planted at that point, and the acres that are intended go in shortly after that. That just flat out didn't work this year because of the weather. Yeah. And so we're kind of going to turn this into more of a July report this year.
And remember, the June survey, what you say normally that is the base for acreage that USDA uses all the way until November. That if you didn't resurvey, they would have no basis for changing acreage. So I think it's vitally important to our markets, to understanding the situation, even to our world food consumers. What is that acreage base? Otherwise, they just have to take the June estimate.
So we'll get updated estimates, and those will be released roughly 5 weeks from now.
Yes.
So it's going to take a little while to sort this out, and that gives us the month of July and the beginning of August to debate what the acreage numbers really are. So this is kind of like a full employment for analysts, I guess.
Remember, we debate, the market has to trade. It has to come up with a price every minute that it's trading.
So speaking of that, let's move ahead. Let's look at some different acreage numbers or estimates or maybe I should call them guesstimates.
I think that's rough, wild guesstimates. Let's put a few more descriptive terms on that. Well, where do you start on acreage? I think this has had a number of analysts I've talked to since the report, obviously producers, and everybody's kind of shrugging their shoulders and putting their hands up and saying, what's your number? Well, here are some numbers, okay? And I've already found some of my colleagues want to debate some of these numbers, including some you might hear in a minute. But let's go back to the March intentions. They were on corn 92.8 million back in the March early survey of producers. The June acreage estimate out Friday was 91.7. And remember, yeah, that's down from March, but that was almost 5 million acres higher than the trade expectations. Now, my sense is that some of the prevent plant acres is in that 91.7, some is not. I using a number something like on corn 7 million nationally, but maybe some of those acres are mixed in with the June acreage. So I'm taking off 4 million acres and saying that gets back something in the high 80s in terms of acreage. Maybe not terribly far away from what the trade estimate, the average of the trade estimate was. So that's kind of the number I'm using, 87.7, 88 million acres. Again, if you're going to run through production and usage, you have to have some numbers. That's what I'm using. Soybeans, I kind of use the same logic there to say that some of the prevent acres may be in that 80 million acres, some is not. I'm thinking we're total acreage prevent plant on beans maybe up around 4 million. And I said, well, say half of them still have to come out. That drops us to 78 million. That should help the futures go up a little bit on soybeans, because those are really low acreage numbers on soybeans with potential yield reductions as well. It does begin to really reduce that billion bushel carryout. Not dramatically higher prices, but certainly some strength. Now, I'm going to stop there. I had enough. I was brave enough to put numbers on a sheet of paper, and they showed up here. So let's discuss particularly the soybeans a little bit.
So my colleague Dr. Langemeier and I were a little bit skeptical of the soybean number, I guess, Chris. I think we're wondering if the 80 doesn't already capture a lot of those prevented acres, and kind of as you alluded to, if at 78 million acres on soybeans, that would put you in the bullish camp on soybeans pretty firmly.
It would put in the bullish camp. And why would the soybean prevent plant on soybeans been caught, but not on corn?
Oh,
That's what you said?
You had to ask the hard question.
Because prevent plant was still in the consideration in late June, last half of June. Corn was not anymore.
Yeah, you've got a valid point. I just, when I look
what you're doing is what we analysts do sometimes. We start with our expectations
and then
try to rationalize why could that be right.
In a webinar a couple of weeks ago, Chris, you had some switching acres, and so that's what I'm going to argue is maybe some acres did get switched from corn and soybeans. Because we couldn't get the corn in a timely fashion, and so I'm going to use that, even though that's a huge swag,
absolutely,
as saying that the soybean acreage is north of 80,
and the acreage went from beans intentions over to corn.
Yeah.
And I guess the other thing, Chris, is, and again, this is being a little provincial, because it's based pretty heavily on our experience here in Indiana. But one of the things we've observed here in recent days in Indiana is producers' willingness to continue planting soybeans past the so-called final planting date for federal crop insurance. We've observed a number of farms that were willing to continue planting, and in some cases pretty large acreages going in. So that was probably where I was a little skeptical on the 78 versus the 80, but I have to admit that's a pretty provincial perspective. It's kind of a one-state perspective.
Yeah, and I think the 80 is low. I mean, compared to anything we had expected or the trade had expected. So that's, and as you look at, how is the market working through and interpreting this? And I think you'd have to say that 80 million acres of beans, that's bullish. We should have seen a really bullish reaction. And our 2 or 3 days of trading afterwards has not been that bullish on beans, and actually tending towards the weaker side. So I think that we have to come back and say the trade doesn't believe the 80. They believe the number is higher than that.
Yeah, that's kind of where I come out.
But they do believe, I think that 88 million is probably consistent with what's been going on
The corn side.
In corn side.
Yeah, I would think you're right. And again, exact numbers we don't know, but that the corn ultimately will come down from this 91.7.
Yeah, the question is how much, and I think the 4 million that you got in there is a good start. I personally think it could come down a little more than you've got it, but that's a guess. All right, let's take a look at putting some of these numbers in perspective.
Well, over on the right-hand side, these are guesstimates, wild and crazy, pulling numbers out of the hat, so to speak. But I've upped my prevent planted on corn to 7.2 million for this 19 crop, and on soybeans to 4.3. Now, as a reminder, if you go back and look at the highest prevent plant on corn, if you can look at the middle of the graph, 2013, 3.6 million acres was the previous high of prevent plant for corn nationally. So that's basically double is where we're at on prevent plant. And again, anytime you see an analyst that takes a number and doubles it, they're probably not using a model to do that. They're probably kind of using judgment, or to say it's a multiple factor. It's not just a 5 or 10, 20%. Roughly the same in terms of the soybeans. 2015, the red bar on the right of 2015, 2.2 million acres. Soybeans, our highest prevent plant. Sort of a guess here might be to throw the number out, roughly double that in terms of the national base. So as we talk about total acreage, maybe 15, 16, 17 million of all crops. Here we have 11 plus million, 11 to 12 million in our two largest crops, corn and soybeans.
So Chris, I have to say, wouldn't that 7.2 on the corn side pull you back even farther than that 87.7 you had on the previous slide? Wouldn't you be back in the more in the mid-80s?
Again, what I think we're uncertain on is, did some of the prevent plant get mixed in with the intentions number, with the USDA numbers? Is some of that already in there?
Oh, okay.
I don't know. And I think that will be clarified by the resurvey.
All right. So
maybe 3 million's already in that number.
good. Okay, good point. All right.
That was my suggestion anyway.
So let's look at the yields, because as much uncertainty there is about acreage, there's probably about as much uncertainty on yields, because we've pushed these planting dates back so far, and we've got not only this idea of pulling down the average yield, but also this increase in variability that we experience with later planted crops.
Yeah, so again, don't want to talk about confidence here in any kind of yield numbers. Confidence has to be low. We just don't know. But I start back with the USDA May estimate. Again, that's early May, before we got into really the weather concerns. USDA was using a trend yield, 176 bushels nationally on corn. I tried to look at the impact of late planting. Certainly every analyst has run through these numbers. They have their models. They have the years they put in. And remember, when we go back historically, 30 years or so, you only have 3 or 4 years that are sort of analogous years. And you have inconsistencies. Some years we plant late, summer's great, we end up with decent yields. So you're really thin data, and any analyst that's looking with analysis with thin data will tell you confidence is not high. I came up late planting impact, lowering national yields about 8 bushels, and then we continue now to at least watch the crop condition reports as they come out each Monday. And the numbers I ran on that for here in early July were about a 6 bushel lowering of yield. Now remember, those condition characteristics are, that analysis is based on history. It's based on if a crop report conditions, good, fair, excellent, etc., are down at this level. Historically, that would relate to this much lower yield. What about this year, when you also have the incidence of very late planting? Will these poor crop conditions be more impact or less impact? So I think it's about the best we can do. That gets me down in the low 160s on yield. And probably many are going to say, well, that's too low. USDA was 166 in their June estimate, again, without a lot of information to do that. So I think we have a lot of vulnerability and a lot of uncertainty. Soybeans, you can see the numbers I'm using, 49.5, just starting with the USDA trend estimate in May. My attempt to look at the impact of late planting, 3 bushel yield reduction nationally, and then the crop condition reports suggesting to us here this week maybe 1.5 bushels lower. So that's 4.5 bushels off of 49.5 or about 45 bushels. Now, on the model I use for crop condition report, we do have a standard deviation. Again, what we're saying is if the crop conditions would stay basically the same as they are all the way through the growing season. But what we have is variability in that, and this early, you often have major changes during the growing season in those crop conditions. And so on corn, we have a standard deviation just on the crop conditions historically of about 6 bushels. So I'd say that factor alone could get you +6 from the number I'm using or down 6. So down 6 on the 162, that gets you down well into the 150s. Up 6 gets you more in the 166, 167. And that's if we had the implications of the late planting correct. So I think there's a lot of variability, a lot of uncertainty, and we have it on acreage and we have it on yield.
Yeah, and I think when I was thinking about your numbers there, Chris, I think compared to the last webinar we did a couple of weeks ago, I think you started off at that point. You'd already pulled your corn yields down some, but I think you were at 168 on corn.
Yes.
And on the soybean side, you really hadn't backed it up too much, as I recall.
Right.
So you're pulling it down already based on a combination of the late planting and the crop condition. And I think we knew this before we started today, but July is going to be critical. And
I'd say talk to me next week, and I'll probably have different numbers for you. And
you at least have different data.
Different data, and if we all predict 20 different times, at the end of the season, we can go back and say, here's the one that was really the best one. So again, I'm making a little bit of a joke of that, but my confidence is very low in these kind of numbers at this point.
Well, and I think that's a good point in the sense that that always starts off that way, but we're pushing the confidence later into the crop season. In other words, normally by the time you get to roughly the 1st of August, your confidence starts to rise in terms of your ability to predict yield.
Especially on corn, you get through pollination, and it is surprising how that uncertainty or variability in yields really narrows down.
This year we're pushing that date back to Labor Day, basically.
Yeah.
Okay. All right, so the futures chart, there you go.
Do we have to talk about this? Yeah, so this is what we all want to know, obviously, or one of the pieces of information we want to know. So this is the July futures, the nearby, and Jim, as you've pointed out, still a lot of old crop, or certainly some have old crop to sell. And where do we go now? What happens next? Well, obviously, we all know well about the run-up in prices. Pretty extreme. We saw from the low there back in mid-May, where the funds, as an example, were short and maybe near record short positions, reversing a lot of those positions, having a major run. We don't want to say the funds are the only ones that determine market prices, but certainly they're reflective in this pattern. And then the last 2 bars there are the Friday and Monday during the report and after the report. And I think one of the things we might expect in this market is, with the massive uncertainty on these numbers of acreage and yield, that the market will try to find a trading range. It'll try to find a support base, and certainly that first support is down there in the 410 range on July futures. And will we retest the upper side of that? Will we see new higher prices? I've been suggesting that I think there's certainly in the possibility mix that we can see that, and that's not unrealistic to trade back up towards those highs again. But it will be based upon probably weather conditions and getting better information about the size of the acreage. We're not going to know size of acreage until August 12th from USDA, so that says the driver primarily is going to be weather events and how those are interpreted and how the crop progress numbers come along. Now when acreage comes in, if we get a surprisingly lower corn acreage, then if you've had weather that's maybe a bit disruptive, then it probably would be in that August report before we could retest. So that's going to be my guess at this point. We've used the word guess a lot. That trading range will hold down here. We hope at the 410 in that range, and then we'll be looking for some kind of recovery off of that. How much recovery that is will be determined by these fundamental factors that will drive that market.
So as you look at the chart, Chris, and you think about what's taken place there, it seems clear to me, at least somewhat this week, that the trade is still a little skeptical of the acreage number that came out Friday. And then obviously we've got the yield uncertainty. And as July unfolds, we're probably going to get little increments of information about acreage coming out from various private sources, which will probably provide some guidance, but definitely not the level of confidence we'd have in the next USDA survey.
I think there will be some attempts by private firms to try to identify how many acres, at least in some counties and regions, did not get planted this year. So that will all come into the marketplace. And we think about markets are pretty efficient. They take information, the best information they have, and you got some that think it's more bullish and some that think it's more bearish. But the average price that the market comes up with, given the uncertainties we have, is a fairly good number for what we know at this point, which is not a lot.
Yeah, and the other point I guess I would make is that we've really stretched out the window where weather is going to be critical. We've got this extended period now with respect to weather impacting corn yields, particularly as you head to the western corn belt where we did get more of the crop planted early. And then as you think about soybeans, we've pushed that back pretty far as well. It won't be too long, perhaps another month or so, and we get a cold morning somewhere and somebody's going to start talking about the possibility of early frost.
There is no question about, and that's going to come in August, I would guess, sometime, that you have 5 or 10 degrees below normal morning temperature, and the market's going to be talking frost.
So volatility is going to be the norm, we think, here over the next 2 months.
And we might say the National Weather Service updated their seasonal forecast June 20th with a tendency towards wet and maybe somewhat on the cool side for as we go on out to the rest of the summer. Again, those long-range forecasts are not as accurate as certainly a 3 to 5 day or 10 day, but again, lots of vulnerabilities this year.
Lots of vulnerabilities. Let's take a look at the soybean chart.
Yeah, and again, I primarily felt like the low acreage keeps that uptrend line in place on soybeans. This was as of yesterday's close, and when we checked today, beans were trading lower, which says we may break out of that uptrend. But again, I think this question of could acreage be as low as those low 80s? Could we still have some prevent plant that is not counted in that with this late season planting? That I just don't see the downside being as severe right now in soybeans. And again, my acreage numbers are a little bit on the lower side of what some are. So I'm not an aggressive seller at soybeans at this price. I think we've got recovery. This is July beans. I would see even back up in November beans are more around $9, $9.40, $9.50 recovery at some point. I think we're going to talk shortness of soybeans at some point on the supply side. Now we haven't talked demand yet. Demand's a struggle. Corn exports are probably going to have to be revised lower in the July update that USDA comes with their WASDE. Soybeans, we're hopeful that China will follow through and buy more beans. Last Thursday, I believe it was, they bought 20 million additional bushels for the 18 crop that we would still hopefully ship this year, although they haven't met all of their commitments to buy all the beans they've already committed to. Lots of uncertainties there, but I still feel not as much downside on the soybeans.
Michael, we're going to switch gears here a little bit, and one of the questions you and I have been getting lately is, well, what is the impact going to be on farm income at the aggregate level and at the individual farm level? And you've taken a look at that, so let's take a quick look here.
Let's start by looking at contribution margins budgeted. So this goes back to March 2019, before we had all these weather issues, compared to prevent plant. And then the next couple slides we'll look at budgeted versus late planting.
So refresh my memory about what a contribution margin is.
Yes, the contribution margin is return over variable costs. You take your gross revenue and subtract all the variable costs. Rather than discuss all the variable costs, it's easier to talk about what's excluded. What's not included in the variable costs are machinery ownership costs, which can be quite large in some cases. Also labor costs, both operator and hired labor is not included as a cost, and then land costs. And so these are return over variable costs, and so it excludes those machinery ownership, labor, and land costs. And so that's why they're clearly positive and fairly high, compared to what they would be if you subtracted all costs. And so if you look at the March 2019 Purdue crop budget before all these weather issues, corn and soybeans were very similar in terms of contribution margin. This is on high productivity soil for Indiana, but would be relatively applicable to other areas across the Corn Belt that have high productivity. We've got the corn yield and the soybean yield up there, in case you're wondering what the land quality is here: 209 bushel corn and 65 bushel soybeans. And then what we did is we calculated some prevent plant payments after subtracting a $30 land maintenance charge. You can see for the corn, on the corn side, the prevent plant is pretty competitive compared to the March contribution margin. And not too bad compared to last year's contribution margin for corn, because we had, even though we had high yields last year, we had relatively low prices, and we did not get the market facilitation program payment to any great extent on corn last year. That was primarily a soybean payment. In contrast, if you look at the prevent plant payment for soybeans, it's considerably below the March 2019 contribution margin. And so I think this goes back to something you said earlier, Jim. You can see why people continue to plant soybeans, perhaps. That prevent plant payment was not as good, and so in some sense, soybeans were more competitive with prevent plant than corn.
Yeah, I think that was definitely the perception, and I think the other thing that drove that was maybe a little less concerned about yield reductions relative to corn.
Yes, definitely.
Yeah. All right.
And so I want to switch gears here and talk about you're looking at the budgeted compared to late plant. So get some different scenarios, look at the contribution margins for different percentage declines in yield. These assumptions here are important for the next two slides. We use budgeted costs, 85% revenue protection coverage, and so that's very important to note. This is high productivity land, and so a lot of that high productivity land in Indiana and other states where our coverage level is fairly high, and so that's reflecting that, 85%. The estimated MFP payment, which is a guesstimate, is $50 per acre. That's what we've been using in other webinars that we've had recently, and so that's what we're staying with. Again, there's a lot of uncertainty related to how big that payment's going to be, but we're using a payment that's roughly similar to what was received last year, average of corn and soybeans. And then we looked at different potential future prices, and we used the University of Illinois iFarm price distribution tool to do this. And so we're looking at prices that are 25%, there's a 25% probability of prices falling below. For corn, that was 372, so 25% chance using this tool that corn futures price in December is going to fall below 372. For soybeans, that's 846, and so that kind of gives you the downside in terms of prices. Looking at equal chance of prices being above or below, maybe your midpoint price, if you will. This is consistent with what Chris was talking about, $4.15 corn and roughly $9 soybeans. And then looking at the upside, this would be a scenario where the acreage is smaller than what Chris was talking about, and or the yield was lower than what Chris was talking about. And so there is a 25% chance or probability that prices will be above $4.64 for corn corn and $9.64 for soybeans. Now, that seems relatively high, that $4.64 for corn, but I've been tracking this, not daily, but close to daily. And about a week ago, before the release of the crop acreage report, that 25% probability at the bottom there was over $5. And so that kind of gives you a taste of what the crop acreage report did in terms of those high price possibilities. That certainly came down.
So just for a little clarity, the Illinois iFarm price distribution tool uses a combination of futures prices, and you did this as of yesterday's settlement
Yes.
prices, and option premiums to estimate these probabilities,
Yes.
right? So that essentially market derived.
Yeah.
It's not an internal forecasting tool. It's derived from market prices.
And we've been encouraging producers to put more than one price in their projections. So that's what I'm attempting to do here. You look at kind of a midpoint price, then look at what the contribution margins or returns would be for a relatively low price and a relatively high price. And so we're trying to be consistent with our advice.
So now you've taken those prices and moved forward and
Yes.
said, what are the probability of various contribution
Yes.
margins showing up? So that's what we're going to show here.
And so there's a lot of different cases out there, scenarios out there in terms of yield reduction. There is some parts of Indiana and surrounding states where the yield reduction is going to be fairly small. Now, granted, that's probably not large swaths of Indiana, but there is places in Indiana where the yield reduction is relatively small. And so if we focus on that middle column, kind of our midpoint price, we can see a fairly healthy contribution margin for those folks. That's over $100 higher than our March 2019 budgeted figure. Moreover, the average contribution margin for corn and soybeans in 2018, again with relatively good yields, was $350. And so that, for those folks, they're looking at a contribution margin that's higher than 2018 and the contribution margin that was budgeted. Now, before I get too excited here, that's going to be a fairly small portion of the producers. And so as we move down here, we can see that we start to see some much lower contribution margins. 10% yield reduction, that's likely in a lot of places in Indiana and across the Corn Belt. This assumes a June 5th planting, so there's no change in revenue protection coverage. That would be $350. That would still not be bad. That would be comparable to 2018. And why is that? Higher prices than what we saw last year. As you start moving down to that 20%, that 30% yield reduction, you're looking at contribution margins that are well below what was budgeted and 2018 levels.
Still got the same thing on soybeans.
And so the soybean story is a little different in that the soybean contribution margin was relatively healthy in 2018, partly because of that large market facilitation program payment. But if you look at the zero yield reduction, that's fairly similar to the budgeted and 2018. And in fact, it's above the budgeted and similar to 2018. As we get into this more realistic scenario, I think, given all the late planting, looking at a 10% yield reduction, you're talking about some contribution margins that are considerably below the budget amount and what we saw in 2018. And so certainly there's some downside when you're looking at soybeans when you start looking at yield reductions of 10% or more. One of the reasons why you can see from this slide that it appears that we're reaching bottom. 281, if you look at that first column, 281 for 10% yield reduction, 281 for 20% yield reduction, you might be saying, what's this guy doing? He must have made some mistake in his math. We hit the floor for crop insurance. And so that's what that $281 is reflecting, as we're hitting the floor for crop insurance. As we go to the 30%, we're reducing the revenue guarantee because of the late planting. The crop insurance floor declines even more, down to $254. As you get higher and higher yields, later planting than June 25th, which we certainly have in Indiana, that floor is going to continue to decline.
Yeah, higher yield reductions as you move through the course of that planting season.
But you did say there is a floor. That's the way crop insurance is meant to work. There is a safety net. It doesn't give me a profit in this case, but it could be a lot worse.
Oh yes, a lot worse.
And I think based on what we've seen here in Indiana over the last week or 10 days, we've definitely seen some farms that are going to be looking at that larger yield reduction as at least potential.
Yeah.
We've seen quite a few soybeans planted here in the last week.
And one of the
or 10
things
days.
we need to mention again, you mentioned it earlier, Jim, but there's probably a lot more downside. Not probably, there is more downside on the corn yield for this late planting than soybean yields. And so I've got some estimates here for the corn on the previous slide. As you get to 20 and 30%, Chris was talking about a wide band in his yield estimates. There's a wide band in these contribution margin estimates because there's just so much uncertainty what that yield's actually going to be when you start planting past June 5th.
Yeah, so I think the good news, I think we don't have data yet for 2019, but based on 2018 data, looking at Indiana, I think the good news is that crop insurance coverage is pretty widespread. I think last year 86%
Yes.
of the corn acres in Indiana were insured.
80% of the soybean acreage.
Yeah, a little over 80% actually. I think it was 82 or 83%. So a pretty high level of coverage by in terms of acres, and a lot of those at relatively high levels of coverage as well.
Yeah. It's probably premature to do this, but I'm going to go ahead and do it anyway. Later on this year, we're going to do a webinar on cash rent and land values when we get the Purdue survey completed. It's still ongoing right now. But as you start getting these higher yield reductions, you're starting looking at some potential declines in cash rent. So we'll have to keep our eye on this and update these slides periodically.
Yeah, and those discussions will be taking place later this summer with a lot of landlords. So, well, that wraps up our webinar for today. Thanks so much for joining us. We appreciate the opportunity to visit with you, and keep an eye on our website. We will have more opportunities to visit with you on some future webinars. We don't have one scheduled at the moment, but we normally have a land value webinar that we do in early August. But we'll keep an eye on your email, and we'll keep you posted that way, and keep an eye on our website. With that, on behalf of my colleagues in the Purdue Center for Commercial Agriculture, I'm Jim Mintert. Thanks for joining us.